We have some very exciting Tesla stock news to get into here today, and I would say this specific reason is why Tesla stock massively outperformed the broader market, rising over 2% in regular trading today and another 0.5% in after hours. So we're going to break that down for you, as well as the major catalysts coming tomorrow, and discuss big tech earnings that came out in after hours today. So we have a jam-packed video. If this is your first time to the channel and the almighty YouTube algorithm has blessed you with coming across this channel, well, hit that like button and subscribe to the channel if this is your first time here. And let's go ahead and get straight into it. Tesla's EV sales in China fell more than 30% in July. This sounds like a scary headline, but when you actually look at last quarter versus the start of this quarter, it's very encouraging. So Tesla sold 64,285 China-made EVs last month, down 31% from June's total, but up 128% from the same quarter last year when a Shanghai factory upgrade curbed production and sales. This is the part that's very bullish, what I'm about to read you next. It says Tesla was the only foreign brand to have increased its EV market share in China in the first half of 2023, with the company's second quarter deliveries there hitting a record of 156,000. So let's break this down a little bit further. So in Q3, we're talking July, August, September. July tends to be the weakest month out of the three. And you still seen 64,000 deliveries. Now, last quarter in Q2 was a record so far in China, and that was 156,000. If you do some simple mental math here, you're going to be looking at about 190,000 deliveries if we average the first month of Q3 and extrapolate that for every month in Q3. That would still be about 40,000 more deliveries for Q3 than you've seen in Q2. Keep in mind that July tends to be slower months for Tesla than August and September. So deliveries are likely to accelerate from here. You're going to be well past Q2's record for deliveries in China. You're probably going to be pushing 250,000 total deliveries in China for Q3, and that's going to mean some big, potentially blowout delivery numbers on the next delivery number release. This is very positive. This is actually up July year over year from 2022 to 2023, 128%. Yeah, and Tesla has a demand problem, they say. Reuters also is reporting that last month's decline was partly due to Tesla idling some production as it prepared for a revamped Model 3 launch. The markets always tend to think the worst about Tesla, even though we always beat expectations. The markets tend to say, hey, one of these quarters, Tesla deliveries are going to fall off of a cliff. So when you get reassurance like this, that things are going better than expectations, yeah, it's going to cause the stock to go up 2.5% and could even continue from here. But on to other breaking news for Tesla. Tesla is now running 43 ads on the Google network, predominantly search text ads. Of new note, Tesla seems to be running a 0% financing promo in the UK for new Model 3 orders with Tesla as a credit broker. This is very interesting and should be a good way to sell more Teslas. At least if you're not in a major city. If you're in a major city, then almost everyone knows about Teslas. But besides that, still a lot of market share to be gained by Tesla out there in the US. Tesla also is discussing India plans with Commerce Minister Goyal in Delhi. And this is as of today. It says India's Commerce Minister Goyal met senior US-based Tesla executives last week in a closed-door meeting to discuss the carmaker's plans to establish a manufacturing plant in the country. Two people with direct knowledge of the matter told Reuters. Tesla has expressed an interest in building a factory in India that would produce a low-cost electric vehicle priced at $24,000, around 25% cheaper than Tesla's current entry model for both the Indian market and export. this is very interesting because now we're getting news of this closed door meeting. 2 days ago, we got news that Tesla has leased a 6,000 square foot building, and it looks like India has actually shut down BYD from entering into production in India. BYD wanted to start a base for manufacturing in India, presumably because India and China don't really get along. That makes sense why India doesn't want BYD in the country. But that's just better news for Tesla, and it looks like things are on schedule, potentially even going faster than what we all expected. Tesla appears to be getting a new permanent tent at the Fremont factory. This tent is $750,000, but it needs building, electrical, and mechanical permits. It also has 13 light fixtures and 12 commercial circuit breakers. The filing states for the building permit: installation of permanent tent at road, light tunnel structure, electrical, and controls. Tesla has used tents at the Fremont factory to add production space, more correctly referred to as a sprung structure. Tesla started using tents back in 2018 as the Model 3 ramp started. By 2021, Tesla had filed to make tents permanent at the factory. General Assembly 4 and 4.5 were used to build the Model 3 and Model Y, with none of the production occurring inside the factory itself. Instead, manufacturing took place in these sprung structures. It also installed a tent last year, but it was only for storage. Tesla's Fremont factory has been space confined for some time, and as noted by Morgan Stanley in a letter to investors last year, the plant was never designed to produce 450,000 units. At its peak, produced 300,000 units before Tesla took it over from Toyota. So I think this is really cool, just my personal opinion. This is a great way to get some extra production capacity from your already existing facility. Throw a couple of these outside. That's great. You're going to produce more vehicles, and presumably you guys can see these are little openings. Hopefully that's kind of where you can get cars in and out. There's quite a few of them, so this should help boost some production, and it's very low cost. $750,000? I mean, that's an easy investment to get back, just ultimately selling, but making a couple hundred, EVs out this tent. I love it. Personal fan. I know this one doesn't have as much to do with Tesla as it has to do with robotaxis. So Waymo is starting robotaxis in Austin, Texas. Now, this is pretty interesting because the initial phase of operation will begin in the fall with fully autonomous development, according to a blog post, but Waymo will wait to offer rides to the public until a few months later. So it's not going to be until probably the first half of 2024 before you actually start to see any Waymos in Austin, Texas. But this is a positive step in the right direction for the whole robotaxi ecosystem, right? More robotaxis out there is really going to force Tesla to get full self-driving to level 4 or level 5 to be able to capitalize on this opportunity, which is robotaxi. Now, I think there is some advantage to actually getting Waymo launching in Austin, Texas as well. And this is an advantage for Tesla because, as I've said before, Waymo doesn't even compete with Tesla's full self-driving technology because Waymo has to launch in individual cities, and it takes a very long time to launch in any one city. Well, Tesla's going to be able to, once they get level 4, level 5 autonomy, to have that essentially across the whole entire United States. So their robotaxi launch can be on a much, much larger scale. And to get more people comfortable with driving in a car or riding in a car without a driver, I think makes a lot of sense. Not a lot of people know there is actually robotaxis out there unless you live in San Francisco or soon to be Austin, Texas. So I think this lets customers get a little more comfortable with not driving their car or not having a taxi driver and letting the car drive itself. As far as earnings, we had Apple and Amazon earnings. If there was one thing that was going to crash this market, it was going to be earnings. That does not look like it happened. Although Apple did not give us great earnings and the stock's down about 2% in after hours, Amazon earnings were much better. Amazon beat on everything. They raised guidance. Things look pretty optimistic for the state of the consumer. That's what the markets wanted to hear, and that's what the markets got out of Amazon. That is why futures are up about 0.25% across the board. This is positive. Now, Apple's earnings were just not great. They weren't terrible. They could have been worse, is what you're going to hear from analysts. They could have been worse. They could have been worse. That's what they say every single time. This is the third quarter on a year-over-year basis of declining revenue. So Apple would be in that recession category if single stocks could be put in recessions. So this is not necessarily where you want to put your money, and I think big tech might not do as well as individual stocks. We'll have to wait and see, especially as the markets kind of broaden out. I don't think Apple or Microsoft or some of these other big tech names are where you really want to be invested. I think Tesla, a little bit different, even considering the news that we got today out of China deliveries for July. This momentum for Tesla could continue for a while, and I think that's why Tesla massively outperformed. Now, the next big catalyst that could rock the markets is the unemployment rate tomorrow morning at 8 o'clock in the morning Eastern Standard Time, as well as the non-farm payroll report. Now, I will tell you right now, it's as simple as this. You don't want to see this data come in too high or too low. You want to see it preferably come in right around expectations. Expectation for the unemployment rate is 3.6%. If this comes in higher than 3.7%, you're going to be in for a problem because that would be the highest it's been at in over a year. If it comes in at 3.9% or higher, that's going to be a new high for the unemployment rate since about Q3 of 2021. So you don't want to see that happen. And it's possible it could happen. I don't think that's likely, but it's possible. Odds are the unemployment rate probably falls to 3.5%. It probably goes down a little bit, and that would be very good. At the same time, you don't want to see it necessarily fall too much because that means the Fed might have to do more rate hikes. Now, the non-farm payroll report, this is one that can be a lot more volatile. We've seen earlier in the week, this week, that the ADP private employment change, basically private sector jobs, added about 365,000 jobs. So that's usually a pretty good indicator that you're going to get a lot of jobs to the non-farm payroll report, and you're only expecting 200,000. So anything in between 200,000, 250,000, probably your best case scenario. Your worst case scenario is under 100,000 job ads. I would rather see job ads of 500,000 or more rather than less than 100,000 job ads, because people want to see a good economy. People want to see investors, I should say, want to see people employed and things going okay. If you start to get signs of a recession, yeah, sure, that means the Fed might not raise one more time, but that's not going to offset a recession. So keep that in mind. You want to see good economic data, but not too good like what we have seen in the past. So I think we're probably going to get a Goldilocks scenario. Non-farm payrolls are about 250,000. Unemployment rate probably coming in at about 3.5%. Don't hold my hat to it, but that's kind of what I would personally expect to see happen. Now, as far as Tesla stock and what's going to be happening. Now, again, earnings were not great. That's for sure, especially with Apple. But they weren't bad enough to cause the markets to crash. It doesn't justify a continued rally, but it does maybe justify where stocks are at today. But definitely not a continued rally. Now, if you look under the surface, besides Apple, Microsoft, Google, Amazon, stocks are pretty cheap. Stocks are historically pretty cheap right now. Besides those big tech names. Even Tesla trading, if you look at it on a price to sales basis or you look at it on a PEG ratio basis, there's a lot of reasons to own Tesla. And I think some money probably flows into Tesla considering the July delivery number, essentially, that we just got out of China, which is indicating very strong growth. I think there's a lot of reasons to buy Tesla, and I think the outperformance that we've seen on the day with Tesla today can continue. The biggest risk to our markets was Apple and Amazon earnings. If Apple and Amazon were to crater, well, that would push the entire markets down. It looks like futures are in the green by about 0.25%. All in all, could have been a lot worse. So that's going to do it for this video. Hopefully you guys are prepared for tomorrow and you're caught up to speed with what's going on with Tesla stock and what could come from here. Again, I want to be very clear. I've said it before and I'll say it again. Tesla stock does not crash by itself. A lot of people have been calling for 200, 150 again. If you're betting on that, if you're actively betting on that, you're betting that the S&P and the NASDAQ crash as well. I don't see that happening yet, although towards the end of this year, starting 2024, that could be a reality. I don't see it yet. So be very careful with some of the bets that you are making out there, especially on Tesla. Things have been great for Tesla. You really can't ask for anything better than what we're seeing right now. Massive, impressive growth, new products coming, potential licensing of full self-driving. There's so many good things. You really don't want to bet against that. And I will continue to tell people that in real life as well as on here. Obviously, I'm not a financial advisor. Come to your own conclusions. I think this is a lot of common sense. If you bet on Tesla in the past and you thought the stock was going to fall, you were massively hurt by that. Let's just call it that. Unless you somehow called the crashes when Elon was selling stock to buy Twitter. That was like one of the only times that would have been a profitable trade. But that's not now. So be very careful out there. So that's going to do it. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys do want to come trade with us live in real time, link down below in the description of this video. We do have a trade on Fubo for earnings tomorrow morning. If Fubo earnings are good, fingers crossed, about a $400 trade could give us a 7,000 max gain on that one. So that one's pretty exciting, and that trade's obviously up a lot. We didn't spend 400 on it. But yeah, if you guys want to come trade with us, link down below in the description of this video. Come ask me questions. Come get a part of the conversation. That is available if you guys do want to be a part of it. Most importantly, enjoy the rest of your day, and I will see you in the next one.